Hello and welcome to your NAB Trade Top 3. I'm Andrew Gagan. IAG has seen its first half profit leap by more than 90% to $778 million, thanks to more favourable weather and a $200 million release from the COVID business interruption provision. It's paid out $5.2 billion worth of claims in the period, with its insurance profit up around 56% to $957 million. It's announced an interim dividend of 12 cents a share for that period. Chief Executive Nick Hawkins has reminded investors the sector remains volatile and that good years help weather the bad. The insurer is guiding gross written premium toward the lower end of the mid to high single digits.
We have a very clear dividend policy that we maintain, which is that we'll pay out 60 to 80% of earnings as our dividend for the full year, and we abide by that. We tend to pay a lower dividend at interim, and then to do a larger amount at final, and that's the same practice you're seeing this time. Now, we also actually have a very strong capital position at the half year, so above our target range, which may be partly what's behind some of those comments. But of course, as well as the interim dividend, there's 22 points of that capital position we're holding back, which is the capital we're holding for the RACQ acquisition that we talked about a moment ago. And so when you allow for both of those, that brings our capital down into the top of our target range. And of course, puts us in a good position for any opportunities or returning more capital to shareholders, in the coming periods.
Treasury Wine Estates expects earnings for the full year to come in at the lower end of its previously guided range, on a cut in expectations for its Treasury premium brands. It comes after it posted net profit of just shy of $221 million, up 32% on net profit of $240 million. In China, Treasury Wine saying Penfolds delivered an outstanding result with strong growth in shipments there and to other Asian markets, while the transition to a global premium division is on track. It's abandoned its sell-off of the commercial portfolio after being disappointed by the offers it's received. It's paying an interim dividend of 20 cents, fully 70% franked. Medicus will distribute a 25-cent interim dividend as its half-year net profit jumped 43%. The company also flagging to the market it remains debt-free, but has not provided guidance. With more than $180 million in cash reserves, Medicus Chief Executive Dr. Sam Hupert has hinted it might be used for future M&A, but has not provided specifics. Shareholders will receive a fully franked interim dividend of 25 cents a share. And that is your earnings season top 3.